Hey guys, it's Sunday, November 2nd, and this is the weekly market analysis video from Craig, the options linebacker. Let's start out today talking about a little bit of market theory on the S&P 500. First of all, let's talk about how the market moves. First of all, you have expansion waves as we expanded the range in June into mid-July. And then what happens after expansion is you get contraction. So the market takes a breath, kind of rest for a little bit, and we saw that as we got into mid-July into the end of August. And that was a contraction move. So after expansion, you get contraction, consolidation. And then as we got into the month of September, we started to unravel, and from that contraction wave, we moved back into expansion and accelerated to the downside. So what's next? Obviously, contraction again. So after expansion comes contraction, and that's really what we've been doing for the last 3 weeks, has been thrashing out this complex bottom in a contraction move. And actually, price can move all over the place in between these yellow lines that I have marked out here, and it will still stay in that contraction phase, which may last anywhere from a month to several months until this move is really worked off and it's ready to expand its range again. That range expansion can either come to the top side or to lower targets again when the next shoe drops. Now, I don't try to project too far out. All I care about is really what's going to happen over the next month or so, as that's really the length of time that I'm in these Iron Condor positions, is about anywhere from a month to 7 weeks. Just to understand the range that we're in right now, what I've done is I've drawn fib levels starting up here at the high that we had up in August, down to the October 10th low. And so on the S&P 500, I've got 38% fib retracements here at about S&P 1010 or so. We got 50% and up to 62%. So I do believe that the price is going to stay below the 1100 level on the S&P. That's the last breakdown level. You can see these breakdown levels where they find support, bounce up from there, and then finally break down through there. So we had that level at about 1150 or so, and 1100 was really the last breakdown level that we had on the daily chart of any significance. So I do expect it to stay below that level for now. Similarly, I do expect the price to stay above S&P 900 for now, and it wouldn't surprise me to see a quick retest of that breakout level. So that's the current pivot right now from above. So that's got about 68 points to go on the S&P. That might take a day or two to get down there, and would scare a lot of people, but that would set in the next move up, at least in this consolidation zone. So just talking about the Iron Condor for a minute. Again, the Iron Condor is where we place bearish trades up here. So we win the trade as long as the price closes and settles below that level, for instance. And then I don't have the room to put it in down here, but we put bullish trades well below support, that as long as the price closes above that level, then we win that trade. Right now we're putting on December trades, and I put my first one on Friday, which is at the Spiders 117 level. So you can see that I've got that trade, which is a bearish trade as long as the price closes below and settles below 117 on December expiration on the Spiders, then I win that trade. So I've got all kinds of resistance levels ahead. I've got the 38% fib, the 50% fib. I've got this breakdown level here at 1100. I've got a long-term trend line that the S&P found as support, which would be overhead resistance if it hits that, as well as that 62% fib. So I've got all kinds of obstacles overhead, which gives me confidence to place this bearish trade right now. And I'm also looking for a bullish entry on a retest of that 900 level from above as support. So if the price gets down to that level, or at least puts in a higher low down in that level, then I'll sell a bull put spread down below, well below support, and probably below the 2002 lows. Another chart that I like right now is the Dow, because you can see how flat that this chart has been trading in this range here just over the last 3 weeks. It's been very, very flat. And the reason for that is the Dow right now has got those blue chip stocks that everybody is just scared to death and is looking for some kind of safe haven to place their risk capital in right now. And the Dow 30 is probably about as safe as you're going to get. So I'm going to look to play some more bear spreads above on the Dow, in this case the diamonds, as the price gets up to this 50% fib. If it's able to do there, I'll pyramid more positions in, very likely above the 11,000 level or the 110 level on the diamonds. Now the Russell 2000 was a great instrument for us through most of 2008, just kind of walked sideways. However, again, when you have consolidation and contraction in the range, what comes next is expansion. And so we've gotten that expansion move out of the way, and so what's likely to come next is consolidation and contraction. However, the Russell still got smacked down pretty hard, a lot more than the other charts right now. So I'm going to wait until the Russell kind of normalizes and sort of finds its center before I start trading the Russell again through the IWM. For the near future, what I really do expect to see is the market just sort of trade within a range, in a very large range too, and that's actually fantastic conditions for playing the Iron Condor strategy. Everybody else is scared to death of this market, and I'm rubbing my hands together. I can't wait to get started with December offense. Stop by and check out what we do. Talk to you later next week, folks. Take care.
Are you optimistic about the way that things are going?
No, I never ever think of it.